Hola. Hello. Hello, everybody. First of all, thank you very much for being here as an audience, and thanks to the speakers also for being here. We have a kind of a very interesting panel now. We will be talking about buy now, pay later from the perspective of the merchant, right? Mastercard, as you know, is a technology company that operates in the global industry of payments. And we do support all sorts of initiatives that have three objectives. First objective, it is that we improve the shopping experience of the consumers. Second objective is more focused on merchants, and is how can we help to make the business grow. And finally, advance in all matters related to financial inclusion. It's in this context where buy now, pay later solutions are really important. And in this field, I think it's key how we work with our partners. We obviously work with merchants. We also work with technology partners, just to name a few, Divido, Splitit, or Gifty. And of course, we work with financial institutions, we work with issuers through our suite of products and services. A clear sample, a clear showcase of how we are working is Mastercard installments. And probably you all know that the recent launch of Apple Pay Later with Goldman Sachs, that obviously runs over Mastercard installments. Just to put things a little bit into perspective before I start the conversation and the panel, buy now, pay later, right? What is buy now, pay later? I guess you all figured it out by the name, but obviously is I get the goods or the services up front, and then obviously I pay later, no? Or I pay in installments. Why this is so important now, or why it has changed so much recently over the last 3-4 years, no? I think because three reasons. The first reason is obviously low interest rates. We still have it. We will see in the future what will happen with the interest rates. Second is the consumer demand. And what the consumer is demanding is, or it's always been demanding this, but now is demanding more than ever, is flexibility, is transparency, it is being able to pay how they want, when they want, and what they want, right? And this is why the new players have come up with technology, which is the third factor, right? Technology now makes possible that this demand of the consumer takes place and could be a reality. And just kind of to size the opportunity, 3 years ago, the e-commerce volume that was affected by now, by later, it was 6%. That was pre-COVID. Now, for the next year, that will be 9%. So in the case of Europe, the opportunity, the size of the opportunity alone is $85 billion US. If we take these figures and look into Spain, okay, Spain is a mere 2%. So average of Europe, 9%, Spain, 2%. And then other countries, especially Northern European countries, like Sweden, could be in 23%, or Germany in 19%. So it still is a lot of headroom, a lot of way to go, or maybe not. This is what we are going to discuss in the panel today. So just a quick introduction on our speakers. We have the pleasure and obviously the honor of counting first with Antonio De Stefano. He's the head of payments for lastminute.com. Everybody knows lastminute.com, hopefully. If not, well, it's a worldwide leader in online travel industry. We also have Carlos. Carlos Madrona is the director of payments and compliance. So be careful in Mango. I guess you all know what Mango is, but in case you don't know, there are also maybe a few people. I don't think so. Mango is a world-known retailer, fashion retailer. Okay. So the first question for you both is a quick introduction of you and maybe the company, in case somebody in the audience don't know each of those companies. Carlos?
Thanks. My first words will be dedicated to Mastercard. Thank you so much, in the name of Mango, for inviting us and to share this time to explain how we see how is our vision about the buy now pay later. I joined Mango 7 years ago. I've been in payments for more than 10 years, first on the acquirer side, and after I jump over to the merchant side where I'm set off. And basically, that is there. It's to define the payment strategy worldwide for the in-store and the online side. Okay, Mango is a retailer company that has presence in 110 countries or markets. And we will make 40 years older soon, and we are a very centric customer because we have both channels. We have the online side and we have the in-store, and we want to maintain this because the in-store is a privileged point for meeting our customers, and everything we do thinking in how the customer will feel this will success or not into our customer journey.
So, my pleasure to be here today. So thank you very much for inviting us. So lastminute.com, we are the travel tech leader in Europe for dynamic packages. We sell flights, hotel, and combine them together in one single purchase, and we are the tech leader of that in Europe. We sell over 3 billion euro every year in gross travel value. So we transact a lot, we process a lot of volumes, but we do also need to take care of our customers. So we sell individual packages, to our customers, and each customer has individual needs, and we try to provide the best service for them. My experience in payments is roughly 5 years. I've been in the company for 6, and I worked in payments for 5. And in these 5 years, we've seen a lot, as you can imagine. First, great expansion of the buy now, pay later options. And then the COVID came, lots of different priorities, but we are seeing this coming back very big, and incredible demand by the customer for this type of solutions. So it keeps us busy, for sure.
Great. So taking account, or taking advantage, you mentioned buy now, pay later. My first question for both of you, but maybe we can start with you, Antonio, is what is kind of the vision of lastminute.com on buy now, pay later? What do you have in the roadmap, or what you have implemented so far? What do you have in the roadmap? And finally, maybe a little comment on what you see are the advantages of the added value that these solutions, buy now, pay later, are offering to your customer.
So we started almost 8 years ago. So we were very first in the market to offer buy now, pay later solutions, which we developed in-house. We had to because of some regulatory constraints, but it became actually a huge opportunity for us because we saw the customer wanted this type of option to pay and split the payment. It was a very basic solution in the beginning, so just a deposit and balance payment later, but it was incredibly successful. So we saw volumes that grew thanks to this option, 20, 30, 40% every year. And now we sell over 70% of our dynamic packages through a deferred payment solution. And so that actually gave us the opportunity to build something in-house, develop our own product. So we started with a simple solution. We complicated later on adding installment payments. So monthly payments over time, flexible solutions that the customer could also customize. And then we started also operating with third parties because we wanted to explore also the credit market. which is not just buy now, pay later, but also consumer credit. So we offer an array of solutions. It depends on the market and depends on the customer's demand. What we found incredibly powerful was the fact that if you give the right message to customers, they come back to you. We ran an experiment just last week, almost by mistake. We removed some pay later options for a certain cluster of payments, and we dropped conversion immediately. So we didn't have to do anything, just switch off the option, and overnight we lost 10% conversion. And that gives you the estimation in very hard terms of how important and how accustomed our customers are now to these kind of options. They cannot do it without them. So this is a huge challenge because you know that they want them, you know that you need to offer them. There are risks and consequences to this kind of solutions, but the rewards are incredibly good if you can provide the right product to them. In future, what we are trying to do is to balance external partners. I'm not going to name the names, but you know the big players in the market, they all offer this kind of solutions with our own, because we have value in our own solution, because that is something we give to everyone. So we don't score the customers. So everyone is allowed to have it. There is a risk with that, but we found the reward to be the biggest success. Customers come back, they pay us, they repay what they owe us. So we don't see why not offering these to specific customers. Our most loyal customers come back, so we want to be there for them.
Thanks so much. I have a slightly different opinion regarding buy now, pay later. I mean, let me come back to my first explanation about how customer-centric we are. I mean, from the payment service, payment methods department, we need to be a service for our customer. I mean, anything we build, anything we create, anything we integrate, whatever, must be very customer-centric. I mean, our mission at the end is to give the customer the payment method that he deserves, to let him pay at the time that he wants, whenever he wants, and whatever he wants. Okay, that's why we are creating a payment ecosystem, a worldwide payment ecosystem. So saying this, and that's a reality, we have buy now, pay later solutions, but in my humble opinion, there are one risk in this market. I mean, the buy now, pay later is split into different axes. So one is the installments that let the customer pay in 3, in 4, or in whatever, and the other one is the open invoice. So we have both solutions, okay? And my vision is that the first one, the behavior of the customer, it's more or less the same as the customer that pays with a classic payment method, for instance, a credit card or a debit card, okay? And the refunds, which is very important for the retailers and for the online merchants that can affect your profit and losses account, it's very tricky, you know? So you need to control in some way, taking into account that we are selling online and the refunds is obviously something normal on the online business, okay? We need to control in some way this percentage of refunds. Now saying this, my vision is to open the certain payment method where the customer will culturally accept this. I mean, the open invoice is very common in the Dutch region, no? For instance. So in this region, the customer creates a confidence with the merchant in order that take whatever you want and just pay me for the things that you keep. But that affects to the merchant in the way that the refunds get increased so far. So this is normal, and we have to accept this because the payment method also offers you a boost of sales, and we cannot reject this because we are sitting here to make business, no? But my vision is it could not be a coffee for everyone. I mean, from the payments methods department, our mission is to aware our company which will be the benefits, the pros and the cons, if we will be aligned with the company objective or not, in order that to make our company profitable. If not, that will not exist anymore. And our roadmap regarding your last question, yes, we will include extra buy now, pay later solutions in different countries. And we truly believe that the ones that use the buy now, pay later, the customers that use the buy now, pay later solution are the biggest fans of these solutions, no? So what we need to do from the merchant side is to offer as much as we consider buy now, pay later solutions in our checkout in order that put these partners to compete by themselves.
So my second question, and again for both of you, it would be, I mean, might be in the audience some merchants or people interested in building a buy now, pay later solution in their websites. What would be your advice, right? So imagine you have to start from the scratch, right? So what are the do's and the don'ts you would kind of share with the audience? And also maybe taking advantage that there are also some acquirers and issuers in the crowd. Maybe you can also, if you want, you can just give a little vision on what should be the role of the payment industry also in this area. Carlos, maybe we can start with you.
Thank you. If you let me, instead of saying do's and don'ts, okay, I will explain what I do to integrate or not, to decide to work with someone or not, or just to reject. So as you can imagine, I receive daily a very good proposals. There's a lot of startups that have created the magnificent new payment method solution, and we have to choose because what we cannot do is to make the customer do a scroll down into our checkout. That does not make sense. So I mean, we have to convert this pain point that is the payment into something in slide. If we can do it invisible, that will help us so far. So what I do is, first of all, I analyze how mature is this solution, because at the end, whatever you put on the checkout, and this is very important for me, must be used. If not, you are occupying some kind of a space in your checkout for nothing, and the checkout is very critical for an online business, especially for the pure online business. So, saying this, once I have analyzed this, and I decide to move forward with that, what I do is to see how scalable is this. So all the companies, we have some kind of struggle with the IT departments in order that the business is running faster than the IT is developing. So we have to optimize the time. And one solution that can be implemented and can be escalated in different countries, taking in consideration that we are selling in several markets, that will help us. Thirdly, I would like to know how many customers this buy now, pay later solution will have for each of the countries that has present. I mean, if you have customers using this, that will work, for sure. It will work in a different percentage, higher or lower, but that will work. You will make business. That at the end, it's how to be focused on. And then after, I do a business case. So the buy now, pay later solutions can offer a lot of possibilities for the merchant. So there are buy now later, pay later solutions that can increase your AOV, your average order value, the frequency of the customers. Some others will bring you new customers that actually are not purchasing in your website because you are not offering this kind of service. So you have to evaluate this, and very important, discuss this with the online business or the in-store business or whoever runs the business in your company, because you must be aligned in some way. So at the end, the company is one, the results are global, and you have to accomplish with the results. So you need, again, you need to help as much as you can to the business side and be very aligned with this. And then after, with this business case, if it's profitable, it's just to prioritize and start developing and go live.
Well, I can only sort of second the plan here because it's just perfect. In our experience, I mean, we had a lot of discussion internally in the company in the last few years whether to go with third parties or to build internally the solution. So in our case, the do's and don'ts is more related probably to the strategy of what, if you want to build your own services or if you allow third parties to come into your checkout. So we experience both. And I have to say, I mean, the most difficult aspect of working with a third party is that they promise this and you end up with that. And unfortunately, the difference is in the acceptance rate. And one of the most disappointing things to a customer is that you promise something and then when it's the time to deliver, there isn't the option. And that is the issue with most of the players, that they tell you, we'll have an 80% acceptance rate, so everyone will get their loan and they can go on holiday. And then the reality is that if you're lucky, you get 30, 40%. Because I mean, I don't know, Mango, what is the average ticket value? For us, it's 1,500 euros. So you're imagining it's a big chunk of money to give to someone that you don't know and you don't even meet, and it's behind the screen. So yes, you have your scoring, you have the way to appreciate whether the customer is worthy of your credit and so on and so forth. But at the end of the day, it's a big risk financially. And so what I suggest is that if you can build your own solution alongside a third-party one, you can spread the risk around in a much more healthy way, which benefits the third party, the partner where you're working with, because you can give some nice segments of the market to work with, but also the not so profitable ones, where you are not happy to give credit, and you are not concerned whether the customer will come back or not, because if it's not worthy of your credit, it means that you don't really want that customer maybe in the long term. But you still offer the possibility to some people to enjoy their holidays with a payment plan. And then if you have your own solution, you can tailor that to the most loyal customers, because they are the one that will come back. They will the one that will be also your ambassadors with other people. And I have that direct experience. Of course, I use my own website to travel. And I've told family members, friends around, look, you can buy your holiday, just pay a little bit now, and the rest will pay over time. They didn't know about it. So one of the biggest issues we have is that customers only discover the possibility of buying with an installment plan or with a deposit and balance plan at the very end of the funnel. If you can imagine, you have 100 people coming into your website, only 5–10% of people will arrive in checkout. If you can tell the other 85–90% of the people, look, there is that solution at the end waiting for you, you will increase for sure your propensity for customers to come to you, buy, and then convert. So one other biggest point for us is the awareness. Make people aware that there is this option. Because if you wait the last step, it's too late. Some people have already committed, they will buy it anyway. Others will just go away because they don't have the funds, or maybe they don't understand what it is. But if you educate your customers and you tell them well in advance, look, we are very happy to give you this option. And that's why I come back to the acceptance, because if you tell them at the beginning, you must make sure that in the end there is something for them. Because if they feel rejected, they will never come back. So there is a double effect of not being able to conclude the transaction because they don't have enough funds, and being told that there is a credit which is not there. So having said that, the important thing is to manage expectation of the customers. So be positive, have a very good communication strategy of what you are able to offer. Diversify the risk if you are using solutions that you built yourself with solutions that you bring from third parties. And at the end, try to minimize the risks, balancing everything out. And it's working for us at the moment. We are working with at least 2 or 3 different buy now, pay later partners. The other biggest concern is the footprint in the countries that we operate in. We operate in 25, 30 countries. So offering buy now, pay later solutions in all of these countries is very difficult because regulations are country specific. Even though in Europe there is a regulatory framework which is European, but each country adopts their own rules. So the directives are not very prescriptive. So each country has different attitudes toward credit. Some countries are more sort of flexible than others, let's say. And then this makes it incredibly difficult to offer something everywhere which is relevant. And working with partners that offer something in Spain, for example, doesn't mean that they're good at offering the same solution in UK or Germany or France, because each country has very specific attitude towards credit. And we found that, for example, just to give a very quick example, in Germany, we have over 80% of people that buy a package with a deferred payment method, because they're very accustomed to that. They're accustomed to the open invoice concept. They're accustomed to the fact that they pay 30 days later, no matter what. But that is very country specific. If you did the same in Italy, for example, the success rate would be a lot lower. So you need to balance also and know your country, the countries where you work with, tailor the solutions to what the customers are either accustomed to, but also willing to engage with. Because some people, for example, in Germany, they hate credit cards. I'm sorry to say, but they don't like them too much.
No, they don't.
They don't. And they don't use them that much, but they use the bank transfers. So again, mixing everything up is what makes it a successful checkout experience. So know your customers, know your country where you operate, and find the best solutions for them that are, in the end, what drives the success.
We have 3 minutes, but I would like to also ask the last question, and maybe we can start with Carlos, so you can rest a little bit, Antonio, on you know, how do you foresee in the future of buy now, pay later? Do you think this trend that we've been experiencing is going to grow, or is going to reduce, or it has to be some standardization across Europe, across worldwide markets? What are your thoughts on this?
The future is now, no? It has been boosted and it's a reality. So the future from the merchant side to manage the buy now, pay later solution, it's to put some kind of intelligent artificial intelligence, sorry, in order that to do a tailor-made checkout for the customer. I mean, if I know that Iñaki will pay with an open invoice, I should be smart enough to offer you whatever you deserve to pay with, no? And this will be, so I mean, the buy now, pay later will be established because that's a reality, and especially the Gen Z, the millennials are using this so much, they are less bankerized, and they will continue on this way. So the goal for the market is to offer a tailor-made checkout solution in terms of payment method for each of our customers.
From my point of view, I think the biggest, I mean, the solution is there to stay. Customers are too used to it. You don't have to sign a contract, you don't have to go through credit scoring. It's all very smooth, easy, fast, and that appeals very much to the younger generations. So as the younger generation will grow, the more this will become commonplace. But yes, I think a common regulatory framework in Europe will be very helpful, so that you can manage also product across countries in a more sensible way. And I think what will be incredibly helpful in the future is that when customers come, you already know what they've done in the past. So building the history, because this is fairly new. But as you use these solutions more and more, the credit, the lenders, the scoring algorithm, the credit agencies, they will know more and more about you. It will be a lot easier to make decisions, and then reach, you know, incremental updates and incremental value to the customer that come back. Is that kind of the factor that I think will win more and more customers with this solution.